Okay, let's dive into something that's been developing for a while now. A perfect storm is brewing in the global silver market. For months, everyone was watching China, but the real trigger, well, that was quietly building somewhere else entirely, setting the stage for a really unprecedented crisis.
I want you to just imagine for a second. What if a resource that's absolutely vital for our modern world suddenly becomes incredibly hard to get? Well, that's not a hypothetical anymore. A major event is about to disrupt the world's silver supply. But here's the twist. It's not one, but two massive events, and they're set to collide on the exact same day.
And that day is January 1st, 2026. On that single day, two huge supply disruptions are scheduled to hit the silver market at the exact same time. Think about it. On the very same day that China basically stops exporting silver, Peru stops digging for it. This is what we're calling the double supply shock. Now, what's so wild about this is how it creates a pincer movement on the global supply. It's getting hit from two different directions at once. You've got the raw material from Peru blocked right at the source, at the mine. And then you have the refined metal from China blocked at the border. It's truly a perfect storm. So to really understand the first half of this crisis, we've got to go right to the source. We're talking about the mountains of Peru, where a conflict that's been simmering for years is just about to boil over. You see, for over a decade, the government in Peru has allowed hundreds of thousands of what they call informal miners to operate under a special registration process called REINFO. It was supposed to be a temporary fix, a way to let them work while they went through the long process of becoming official. But it became the status quo, and that is all about to change. And this timeline here really shows how this whole thing has come to a head. For years and years, they just kept extending the deadline, kicking the can down the road. But now, the government has drawn a line in the sand. The final deadline is set, and this time, they're saying there will be no more extensions. So at the stroke of midnight on December 31st, 2025, an estimated 300,000 miners will become illegal overnight. Now, to put that number in perspective for you, that's a workforce larger than the entire population of a city like Orlando, Florida, suddenly criminalized. And let's be crystal clear about this. We're not talking about a small fringe group of people. This informal sector is a huge, vital part of the global supply chain. They produce a massive chunk of Peru's gold and silver. They're the ones working the smaller veins that the big international companies ignore, and they feed that metal into the entire system. And as you might expect, they are not going quietly. As we speak, thousands of these miners are blocking major roads like the Pan American Highway. Trucks full of silver and copper concentrate, well, they're just stranded. The entire logistics of the world's third largest silver producer are grinding to a halt. Okay, so that's the fire starting in Peru. Now let's fly to the other side of the world, because on the very same day, China is building its own wall against silver exports. And this is that second shockwave. China, which is the world's #1 refiner of silver, is putting in place these strict new export licenses. Now, the official reason is just bureaucracy. But a lot of analysts believe China is making a strategic move here, stockpiling the metal for its own huge tech and green energy industries. They're effectively cutting off the flow to the West. When you put these two things together, the raw material from Peru getting blocked and the refined metal from China getting blocked, it's an unprecedented event. I mean, for the world's third largest producer and the #1 refiner to both go offline on the exact same day, well, that's a scenario that most people in the industry would have told you was basically impossible. So what happens when these two powerful forces collide and the supply chain just snaps? The fallout could be really dramatic. By the way, if you like our videos, please like, share, and subscribe to follow us so you won't miss any exciting updates like this one. This is where the timing becomes so incredibly important. As you can see from this chart, the silver market is already running a huge deficit, about 200 million ounces short every year. Now, if this conflict in Peru lasts just 3 months, that's another 25 million ounces that just vanishes. The market simply cannot afford to lose a single ounce, let alone millions. Let's make this personal for a moment. Forget the global numbers. Picture a refinery manager in, say, Switzerland. He gets an email in the morning. His big shipment of refined silver from China? Canceled. Then an hour later, a call. His raw material shipment from Peru? Stuck on a blocked highway, indefinitely. He looks at his inventory and realizes he only has 2 weeks' worth of silver left to run his entire operation. So what does he do? I mean, he has customer orders to fill, he has furnaces that need to run, employees he needs to pay. What's his next move? He panics. That's what he does. He gets on the phone and he tells his traders to buy any and all physical silver they can find, right now, at whatever price they have to pay. And that, right there, is how you get massive price spikes. It doesn't happen gradually. It happens with sudden panic buying from the industrial users who are absolutely cornered.
And this brings us to a really important point: the difference between the paper price of silver and the price of actual physical silver. The price you see on the news, that's the paper market. It's all about algorithms and computer trading that assumes supply is normal. But the physical market, that price is in the reality of a blocked highway in Peru and a closed border in China. And in the end, you can't build a solar panel with a piece of paper. Physical reality always wins.
Okay, so let's tie all these global threads together and talk about what this really means, and what the key takeaways are from this whole developing situation.
First off, it's clear the supply side is incredibly fragile. You know, it can take 10 years to build a mine, but it only takes one day to block a highway and shut it down. At the same time, demand from all this new technology is stronger than ever. Second, political risk is now a huge factor. The days of cheap, easy-to-get metals are over. And finally, the mainstream news is almost completely missing this story.
This quote right here really hammers home just how important this is. All the amazing technology we hear about every single day, AI, electric cars, solar power, none of it works without these so-called boring metals. And you can't have power for your AI servers if you don't have the silver to make it happen. Which leaves all of us with one final, very powerful question. When the world's #1 refiner and its third largest producers go offline at the same time, where's the metal actually going to come from? And if you can't answer that question, then you understand the true gravity of this coming double supply shock,